Today in crypto, a massive crash has taken place in the oil markets, one so crazy that I had to get out the banana shirt for it. And even if you don't care at all about the oil markets, this video is an important one because it really serves as a stark warning about how dangerously fragile the global economy is right now. This could spread panic to other markets. And of course, what does all of this mean for Bitcoin? The Crypto Lark. This is where you subscribe for all of the hottest and all of the latest happening in the cryptoverse and beyond. By the way, if you are new to crypto, then check out my beginner's course called Cryptocurrency Explained. It will walk you through all of the basics to help you get started investing in Bitcoin and cryptocurrencies. There's a link down below where you can learn more. So the big news today is that the oil markets, they have been absolutely savaged. It's been crazy. The West Texas Intermediate, which in case you don't know is the benchmark price for US oil, it fell to minus 40 today. Minus 40. Yes, you heard that right. Minus $40. Went totally negative. This is the first time in history that prices have gone negative for oil, meaning that producers were paying buyers to take the oil off of their hands because storage facilities, they are completely full and they can't cope anymore. Because obviously, oil going under zero is what happens when the economy is functioning well, doesn't it? This is wild. Demand for oil has been crushed with the global economic downturn. That is no surprise, I think, to anyone who's been paying attention. But producers of oil, they have continued pumping oil out of the ground, leading to an oversupply of historic proportions. Do understand, though, that this is just one oil market. The US oil market is the one that got savaged today. Internationally, prices have, yes, they've been battered big time over the last few weeks, but nothing like that. That's crazy. Although the dick measuring contest currently taking place between Saudi Arabia and Russia has actually done very little to support prices, with both of these countries really committing to pumping more oil into the markets. But of course, this negative US oil price, it's really only in specific reference to the price for crude delivered in May. So this is the month in which oil demand is expected to be the lowest and supplies are expected to be the highest. So it's a very specific thing, but still incredibly significant when you consider the overall implications of what this means. But can we just take a moment here to laugh real quick? Because I thought it was Bitcoin that was supposed to go to zero, not oil, man. Funny how all those mainstream talking heads were wrong. Again. I'm not surprised, actually. But anyway, in fact, one of the largest markets, it just completely imploded. And Bitcoin, it really just finished the day only down around 5%, which is not bad considering what happened to the oil markets today. Although oil prices did see a bit of a recovery after Trump announced that the US will be buying up 75 million barrels of oil, which is a pretty good decision to buy that oil, fill up the US strategic reserves on the cheap. But anyway, I digress. A collapse of the oil derivatives markets could be bad news bears, man, for the wider markets, as it really creates a strong risk that panic could spread to other assets. In fact, other markets might already look like the oil market did today if it wasn't for the fact that you have the Federal Reserve dumping trillions upon trillions upon trillions into the economy, buying up junk bonds, putting in money for the repo markets, for Wall Street and all that craziness. But now that oil has led the way, there's of course a massive risk for carry-on effects to start playing out. Commodities across the board could get crushed, potentially with the exception of gold, of course. A real domino effect of destruction could be underway. What has happened? We've seen consumer demand just go right through the floor, basically. The jobless rate in the USA, it topped 22 million last week, and the nail in the coffin for the economy is likely coming very soon. negative rates in the world's biggest economy. Yes, the USA is likely to be the next to join Japan and the EU and a few others in the negative rates game, whereby you lose money if you leave it sitting in the bank thanks to bad rates. Cool stuff. So let's have a quick listen here to these two very intelligent dudes riffing on that topic for a second, because I think it's very, very interesting to see where everything is going.
Call the euro just wonderfully well in all of the interest rates. Well, I think we have a pretty similar thing right now, and we have a lot of people that don't want to believe it. That's what I like about. You go and put out on Twitter that the charts all look like we're going to a negative interest rate policy in the U.S., you'll get trolled like crazy.
I mean, I did exactly that, and I got trolled like crazy. Everyone said, can't you see it's hyperinflation? I'm like, I understand your narrative, but the charts don't tell me that, nor does the dollar, nor do the commodity markets, nor does anything, nor does the equity market. So I understand why you might think it's hyperinflationary, but I don't see it in the charts. It looks like we're going to deflation.
Yep, negative interest rates and deflation. Very exciting stuff, but that is what is likely in store for the world's biggest economy. The simple definition of deflation, in case you are not aware, is that this is what happens to an economy that experiences declining prices for goods and services. Intense deflation was also a prominent feature of the Great Depression that followed, of course, the 1929 stock market crash. Very famous in case you don't know about it. And of course, it means that businesses will face lower profitability and hire fewer workers while investing in less expansion of productive capital. Basically, a massive economic slowdown. Now, how does a central bank fight against the forces of deflation? Well, by expanding the money supply, which the Federal Reserve has already been doing quite aggressively for the last few, months really, but I mean, we're talking decades here of massive quantitative easing. And of course, by cutting interest rates to incentivize spending versus saving. Long story short, the economy is not doing super well, in case you hadn't noticed. Now, in terms of investing, the plays for a deflationary scenario are, of course, the classics. Buy dollars. Yes, I know the dollar is in big trouble long term. You have trillions upon trillions being put upon the sacrificial altar of Wall Street. The stimulus package is one of the biggest handouts to corporate America ever, and it's just, if you're not disgusted by that, I don't think you're paying attention or don't know what the stimulus package involves. Companies that have spent the last decade shoring up corporate profits with stock buybacks, they now all have their hands out to get some of that free money. The dollar is supporting a broken system. The Wall Street banks, they're getting $1 trillion a day in liquidity. It's not $1 trillion new dollars every day. It's just $1 trillion put up for the overnight lending markets in total, available daily. The small business bailout fund, yeah, I remember that. That was raided by hedge funds, man. By hedge funds. Come on. Hundreds of billions of dollars have been provided internationally as well to keep the dollar forex markets afloat. But the pockets of the U.S., they are very, very deep. And the ability of the U.S. to manipulate the dollar and for the dollar to remain powerful, largely thanks to its status as the global reserve currency, should not be underestimated in the short term. Long term, I remain bearish on the dollar. Right now, it is a flight to safety, and a good portfolio will have a decent amount of readily available dollars sitting in it. The second play is, of course, to buy gold as a hedge against all of this insanity that you're seeing going on right now with the global economy. Now, gold is one of the few things that I personally wish I had a bit of in my portfolio, because it is that relatively stable store of value, that classic thing that's been here for thousands of years. And of course, physical gold is far better than paper gold if you are going to be doing some gold investing, because as oil just proved, a run on the markets is very, very possible. And due to all the trickery that goes on in the gold markets, things like rehypothecation, there may not be enough physical gold for futures investors to take delivery should a run on gold happen. So avoid the counterparty risk and hold the real stuff in your hand if you can. And finally, of course, Buy Bitcoin. Buy Bitcoin because you understand what it is. You understand what Bitcoin represents in terms of digital scarcity. But do understand that there does remain a strong risk that Bitcoin could be drugged lower with wider market moves. But perhaps enough of the short-term speculators have moved aside for the moment, and Bitcoin can get on to doing what Bitcoin was designed to do and have that really shining breakaway moment from the traditional markets. One thing remains sure for me though: having Bitcoin in my portfolio makes me sleep well at night. Even if the dollar value goes up and down long term, I know that I've got a portion of a very scarce asset in the world's strongest computer network. So that to me holds an incredible amount of value. And I think it's something that a lot of investors are waking up to. And the more that Bitcoin gains interest, the long-term picture for Bitcoin remains very positive. This is why personally I keep up my usual play of just dollar cost averaging into Bitcoin and into Ethereum. Yeah, I do a little bit of trading, all that stuff on the side, but really it's mostly just stacking sats, stacking Gwei, and then chilling with an eye on that long-term game. But of course, those are just my 2 Satoshis. How are you feeling about the economy right now? Do you think that the oil market, was this just an aberration, just a thing that's going to happen one day people look back on and laugh about? Or is this some kind of canary in the coal mine of the economy? And do you think that we could be about to hit a very rough patch? Do you think that this could even cause a domino effect into other markets? And how is your opinion on this matter actually affecting the way that you're approaching your portfolio right now? Or does none of this bother you at all and you're just stacking sats and chilling? Let me know about it down below. Thank you so much for watching today's video. As always, you guys are totally freaking awesome. So thank you so much for watching today's video. Hope you're having an awesome day wherever you are, whatever you're doing out there in the wild, wild world. If you did enjoy today's video, hit that thumbs up button. And of course, subscribe to the channel if you're new around here. Long live the blockchain. And peace out till next time.